Thank you, Cathaoirleach. Cathaoirleach, the Social Democrats support the bill before the House. We support the single resolution mechanism, which is already in operation. We support the single resolution board, which is one part of the single resolution mechanism. The bill before the House gives the Minister for Finance the power to provide bridging finance of just over €1.8 billion to the SRB in certain eventualities, when the bail-in mechanism has been used up, when the existing central financing has been used up, and so forth. Critically, the bill describes the €1.8 billion as bridging finance, because obviously states should not be in the business of bailing out private banks, bailing out private investors. So we support the SRB, we support the single resolution mechanism. We are comfortable with any Minister for Finance having the power to provide up to €1.8 billion as bridging finance, obviously with a very clear undertaking, as contained within the bill, that the Single Resolution Board would pay back that money to the state, and that money would go into the central fund. In a way, though, we should use the opportunity, when we're looking forward and looking at how the Eurozone should conduct the wind-up of private banks, we need to look at the past, because we are by no means clear of the damage that has been done. I and many others argued that regardless of whether or not there was a formal mechanism like the single resolution mechanism, banks should have been allowed to fail. Now, there are mixed views and mixed informed views as to whether or not the likes of AIB, Bank of Ireland, Permanent TSB should have been allowed to fail. There's pros and cons on each side, and I don't think there'll ever be a full consensus. However, it's very clear that the banks making up IBRC should have been allowed to fail. Anglo-Irish Bank should have been allowed to fail. It was essentially a casino. It was a casino for developers. It was a casino also for bondholders. There were many international investors investing into Ireland, investing into Anglo-Irish Bank, very large sums of money. Why? Because Anglo-Irish Bank was paying them back higher yields. Now, what these investors didn't do is they didn't do their due diligence. They didn't look and say, the property market in Ireland is clearly overheated. They didn't do their due diligence and say, Anglo-Irish Bank is completely exposed to that property market. They didn't do their due diligence, because if they had, they would have concluded very quickly that they shouldn't be lending money to Anglo-Irish Bank. Unless, of course, they knew something which the rest of us didn't know at the time, which was, even if Anglo-Irish Bank goes to the wall, they'll still get all their money back, because the state will step in and will pay them back. But not only will it pay them back, and this is something that cannot be stated enough, not only did all of these bondholders get their money back, they got all the interest payments on their loans back as well. So not only did they not lose any money, they walked away with all of their profits. So the Irish people not only said, here, you don't have to lose any of your capital. Here's your €100 million back. Here's your €1 billion back. Actually, we're going to give you all the profits on that, as if Anglo-Irish and Irish Nationwide hadn't gone to the wall. It's something that's just absolutely outrageous. Now, the chances of us getting back any of the money we put into the pillar banks is slim, and there is an argument being put forth that actually our equity in the banks plus repayments from those banks will cover that money over time. But of course that's not the case for Anglo-Irish and Irish Nationwide. And the promissory note, the famous promissory note for just over €30 billion, was paid down in tranches over several years. And then when the political pressure became too great, the government entered into an agreement with the so-called Anglo Promissory Notes, which was voted through the House at about 2:30 in the morning one night. The total cost to the state, according to the Comptroller and Auditor General's report, up to last September, of the amount of money that the state used to bail out the banks, just the interest payments to date on that amount of money. So just the interest on the money we borrow to bail out the banks. The Comptroller and Auditor General reckons that to be about €9 billion so far. up to last September. I mean, just think what we could do with €9 billion in this country. Now, the last government heralded the creation of the Anglo Pro Notes as a great triumph, a great piece of negotiation. And there was some extraordinary misinformation in the House whereby they claimed, or at least some of them claimed, in fairness, I don't think Minister Noonan ever claimed this, but some members of the previous government claimed that they had avoided having to pay the Pro Notes. Whereas, of course, that's not only untrue, but in fact, exactly the opposite is the case. What the government did was took 2 dodgy IOUs from 2 casinos that no longer existed and were under criminal investigation. It took IOUs to 2 dead, negligent casinos and turned them into gilt-edged sovereign debt and put a payment schedule against that. And here, look, it's very important that we understand this payment schedule because there were minimum amounts put against it. For 2015 to 2018, the minimum amount that the Irish state had to pay back was £500 million a year. For 2019 to 2023, the minimum amount per year that the Irish state had to pay back was £1 billion. And then after that, it rose to £2 billion a year. Now, just to explain what that means that at a minimum, the state had to tear up €500 million a year for a few years, then tear up $1 billion a year for a few more years, and then tear up $2 billion a year for a few more years. But it turns out that we didn't meet the minimum requirements. We massively exceeded them. So last year, the Central Bank of Ireland only had to sell, essentially tear up €500 million. It went 4 times further than that. It actually sold $2 billion of sovereign debt. Now, what that means is it took the IOU to these 2 dead casinos and sold out onto the market. It borrowed money from the market and tore up that bit of the IOU. So the money that it sold out, there's no way you can get that back. The government has gone out in good faith to the markets, said, can we borrow some money, sovereign debt? Investors have said, yes, there you go. And the central bank took one of the bits of the IOU out of the safe and tore it up. So we got nothing in exchange, but the national debt gets turned from questionable IOUs into irrevocable sovereign debt. Now, the Social Democrats and many others contest that that debt is odious debt. Let me just give you the definition, Cahirlik, of odious debt. Odious debts are those contracted against the interests of the population of a state, without its consent, and with the full awareness of the creditor. Now, that appears to absolutely match the Anglo Pro Notes. So the Social Democrats contend that the Central Bank of Ireland should not be tearing up those IOUs. The Social Democrats contend that the Central Bank of Ireland should not be exceeding its minimum mandates in tearing up those IOUs by a factor of 4. The Social Democrats contend that the Irish state should take a position that those debts, the Anglo, IBRC, Irish Nationwide Pro Note debt, is odious debt. Think about it. The Irish people have been asked to give money to the Irish government, the Central Bank of Ireland, so that people who loaned money to Anglo-Irish Bank in 2007 get all their money back and all their profits. And the cost of that, just paying the interest on that, plus the loans to the other banks, is €9 billion so far. That is odious debt. Let's just leave the Bank of Ireland, AIB, permanent TSB debt aside. Let's just leave that aside. The IBRC debt is odious debt. It is debt that the people of Ireland should never, ever have to pay. And it is debt that the European institutions, the political institutions, the economic institutions, the monetary institutions should recognise as odious debt. They should recognise it and say, look, whatever about your pillar banks, you gained from keeping those banks alive. But you didn't gain from keeping Anglo-Irish or Irish Nationwide alive. We, the Eurozone, did because no bank failed. So there was no contagion. There was no additional risk. And therefore, we are going to waive your obligation to pay any more of that money back. Now, the current position of the Irish government is that those debts, the money loaned into Anglo Irish Bank to pay back anonymous foreign professional investors who didn't do their homework, the position of the Irish government is all of that will be paid in full. That should not be the position of the Irish state. The position of the Irish state should be, we recognise that the IOUs are there. We are pausing payment on the IOUs, and we are seeking multilateral negotiation and agreement to classify them as odious debt. And in so doing, through agreement, waive Ireland's obligation to pay them. Or use a fudge for the monetary purists in Germany and Finland and other places and say, all right, we don't just discreate money. Apologies, Cahirlik, if I'm making up words. We don't just, we can't just make debts go away. But what we can do is take a 100-year interest-only loan, we pull them out, the money still exists, but inflation takes care of it, and it doesn't act as this burden on the Irish people. The Social Democrats believe that one mechanism for that is a debt conference. With everything that has happened over the last number of years in Ireland, in Greece, in Portugal, Spain, Italy, etc., that a European debt conference would be very useful. As we know, there was such a conference in London after World War II. And the country that got its debts written off and extended out so that inflation took care of them, I believe the greatest write-down in sovereign debt history in the developed world, that country, of course, was Germany, because some of the debts incurred were viewed to be odious debt. So, Cahirlik, the Social Democrats support this bill. We support a mechanism whereby banks can be wound down. No bank should be too big to fail. Hundreds of banks fail in America all the time. There's mechanisms in place, there's guarantees in place. That should be the case in the Eurozone as well. However, we should not simply walk away from the tens of billions of euro that is still on the back of the Irish people, plus interest, because of Anglo Irish Bank and Irish Nationwide. We are not suggesting, to be clear, any unilateral action. That is not what we are suggesting. But we should be making the case, and we should maintain the position, that that portion of the banking debt is odious debt. It did not benefit us at all. It did benefit the Eurozone. It benefited the ECB, who has the mandate to secure stability in the European banking system. So a multilateral agreed negotiation to classify the Anglo Pro Note debt, or the IBRC Pro Note debt, as odious debt with a view to having it written off or pushed 100 years into the future at zero interest is what should be done. Thank you.